Welcome to today's video. Today we're going to discuss a really interesting topic, which is, do you need to be intelligent to invest in stocks? And we're going to use the example of Sir Isaac Newton to answer this question. Now, a lot of you might know Sir Isaac Newton for being a famous physicist and mathematician. You might have heard from him in school when discussing the law of motion or when discussing the law of gravitation. But what a lot of people don't know was that he had a really big interest in economics and finance. Sir Isaac Newton was a really wealthy man. He earned around 3,000 British pounds a year, which put him in the top percent, not only top 1%, but nearly the top 0.1% of British society at that time. He owned his own property, and in British society at that time, owning property was a big sign of wealth. But when a lot of people just buy more properties and more properties, Newton put nearly all his wealth into financial instruments, which was a new invention at that time. He put a big portion of his wealth into one company called the South Sea Company. And today is going to be the story about the South Sea Company investment of Sir Isaac Newton. So let us begin with talking a little bit about the South Sea Company. The South Sea Company was established in 1711 to deal with a pressing financial problem. The British government had a large backlog of unpaid bills, largely from contractors supplying the British military during the War of the Spanish Succession. The government offered its creditors South Sea stock, or a product similar to stock in a modern corporation. The stock did not promise full repayment of the money the creditors were owed, but it did promise them regular payments of interest. So the purpose of the South Sea Company was to conduct trade with the Spanish South American colonies. It was granted a monopoly on trade in the South Seas, and this led a lot of investors to believe that the company was on verge of success, that it would give you a lot of wealth if you bought its stocks. So its stocks was sought after and its price rose sharply. If you look at the financials and the ground of the South Sea Company, you would quickly realize that the company was losing money each year. It was unprofitable and its operations were minuscule. However, what led the price of its stock to rise sharply, it was the dream it inspired. A lot of people just wanted it to make them a fortune, and the monopoly helped keep the dreams alive. Now, something that created this mania for South Sea stocks was the arrival of the newspaper. Just in London alone, the amount of newspapers rose from 1 to 18 different newspapers. Even though some of the newspapers discussed the fundamentals of the company itself, most of them wrote glowing article after glowing article about the company. When the South Sea Company was to issue new stock, the management anonymously put an article in the Flying Post about how great the company was. And it led to a total mania. Everyone bought South Sea stock, from peasants to lords, everyone. And not only South Sea stock, but it created a frenzy in the stock market in general. Investing became popular. It was described about the South Sea that a company for carrying out an undertaking of great advantage, but nobody to know what that is. A lot of people just put all their wealth into this company without understanding what the company does or if it's actually profitable or not. Now, Sir Isaac Newton was undoubtedly an intelligent man, but his story perfectly explains what you need to be a good investor. What you need is to not let the market, the news, or other people, or just the hype get to you. You should always rely on your own analysis, your own financial analysis, and the reality check. How is the company actually doing? If you're just relying on hype, if you think that, oh, the market is going up, I'm going to make a fortune, when the financials are not there, the fundamentals are not there, then you're taken by the hype of the people. And that was Newton's fault. So even if you're really intelligent and have great academics, it's the self-discipline, it's the emotional self-discipline that you need if you're going to be a good investor. Please don't forget to subscribe and hit the notification button for more content like this.